It is darkest before the dawn, and the best time to invest, according to Warren Buffett and the great investors of our time and of all time, when markets are deeply into bear territory. There's a cycle of fear and greed, and both are healthy. The fear should occur at the top of cycles, taking profits, and the so-called greed part of that dynamic.
Hey guys, welcome back to Library of Wealth. Today we have ARK Invest CEO Cathie Wood giving us a market breakdown and where the economy is headed for 2023. Wood believes the Fed rates will decrease by the start of next year because the economy is showing signs of extreme weakness. She says they're making a huge mistake with their monetary policy, and unless a pivot happens, deflation is a certainty. The employment charts have been down for the last 4 months, and we're seeing many layoffs from companies everywhere. Cathie says while it's good and bad, and while it's a bigger risk than inflation, she's already seeing cyclical deflation in the pipeline. Let's check out this interview with Cathie Wood as she gives her market predictions for the next few months. Don't forget to like and subscribe if you enjoy the content we do here on this channel. Let's get right into the video.
Our market outlook for 2023, inflation, interest rates, corporate earnings, and how innovation should fare in that environment. Okay, well, we know that we're getting a lot of deflationary signals, but the Fed isn't really buying into that yet. We think that the bond market, though, will start to convince the Fed. So the bond market is telegraphing either much lower than inflation, lower than expected inflation, or recession, or both. And we've seen the 10-year Treasury bond yield drop from 4.25 to 3. It got down to 3.45. It's around 3.6 right now. So that doesn't leave very much room. If you assume that the long bond is kind of a proxy for how fast nominal GDP will grow, it doesn't leave enough room for much growth and inflation. And we also know that the market always leads the Fed. And I think the bond market is speaking very loudly. Jeff Gundlach, very interestingly, Double Line's famous bond investor, very, very successful. He has made the point, okay, it does look like inflation's coming down. Why is it going to stop at 2%? And we would agree with that. We're seeing a lot of deflation in the pipeline. Commodity prices, discounts at retail during the holiday season to clean the shelves of massive inventories. So we think that's going to show through in terms of inflation. And very importantly, housing has taken it on the chin this year. Usually the Fed is very sensitive to that. Autos as well. They really went nowhere, and now used car pricing is down 14% on a year-over-year basis. So inflation will come down, and innovation actually is going to be part of that equation. The truly disruptive innovation platforms around which we have centered our research, so gene sequencing, robotics, energy storage, artificial intelligence, and especially artificial intelligence, as well as blockchain technology. All of them are deflationary in nature. Good deflation, it should cause a boom in the products and services associated with innovation. But deflation, another source of deflation. So our confidence there is building. We've been right on the inventory build, the commodity price decline. And I think normally the market would have responded already. The market is waiting for the Fed. And we think the Fed's rhetoric will change first, and then its actions will change. And we think that's all going to take place in 2023.
Wood believes ARK Invest will once again outperform the market once the economic pain from high inflation and the Federal Reserve's rate increase subsides. She's noticed the extreme fears of inflation in markets today, and no one is really making big bets, and cash is at record highs.
Investors seem hesitant to invest now for long-term growth, given supply chain disruptions and the economic downturn caused by rising interest rates. Why do we believe that now is a once-in-a-century investment opportunity? Well, a couple of reasons. Innovation solves problems. And we have a lot more problems now, even more than during COVID. We have corporations now experiencing margin pressure. And we have individuals, consumers, perhaps worrying about their jobs. And when we get into a period like this, businesses and consumers are willing to change the way they do things, and they embrace innovative solutions to their problems. Now, this once in a century is not an understatement. We have not seen more innovation platforms evolve at the same time ever. The closest is about 100 years ago: telephone, electricity, and automobile. Interestingly, back then, we were just getting over a pandemic, the Spanish flu, and over a war, World War I. And at the same time, we were experiencing incredible innovation. And so very similar dynamics. And what happened? Inflation peaked in June of 1920 at 24%. And within 1 year, it was minus 15%. We think we're going to experience a mini version of that during the next year. And then what happened? We launched into the roaring 20s when the stock market had, I believe it was compound annual rate of returns of 25% for the next 8 years. The roaring 20s, we think we have a setup here for the roaring 20s, and it is all around innovation.
Wood says she's worried that given the brutal market backdrop this year, investors are too fearful of innovation that is going on, even though many of these disruptive companies are already evolving into the new leaders of the next bull market cycle. The innovation market currently holds $8 trillion in market capitalization, but she estimates will be worth $210 trillion by 2030. Despite big losses for her fund this year, ARK Innovation ETF, Wood continues to embrace her investment strategy in disruptive technology, as many of her stocks have plunged from the highs in 2020 to now down over 60% in 2022 as rising rates have hammered tech stocks. What do you think about Cathie Wood's perspective of technological innovation as a key driving force for deflationary pressure, as well as her innovation prediction of $210 trillion by 2030? Comment down below. Thanks so much for watching. Don't forget to like and subscribe. This is Library of Wealth. We'll see you in the next video.